decided to hold on to those stocks for 1 year. Nike has made 4 dividend payments of 18 cents per share for the year. With your 100 shares, you received $18 for every single quarter, or $72 total. The great thing about dividends is that these payments get deposited into your cash account, or you can also reinvest them to buy more whole or fractional shares. These whole or fractional shares also end up paying you dividends. There are also disadvantages to dividends. The money you receive from dividends is mostly a lot lower than you would receive from a capital gain. Dividends are also a long-term strategy. They are not get-rich-quick. Also, many companies are flaky with their dividend payments. Some constantly cut their dividend payments, and others completely halt paying dividends during times of financial hardship. There are also companies that never increase their dividend payments or increase it after years of paying the same dividend amount. However, I like dividend-paying stocks, but only from specific companies. I do fundamental research to see which companies are worth buying, and I also analyze the dividend payment history, especially during times of economic turmoil. Because companies that can still pay an increase in dividend during a stock market crash are companies to keep an eye on. Let's look at 5 dividend-paying stocks you should have on your watch list. Number 1. Nike. This athletic apparel retailer sells its products worldwide with a focus specifically on athletes. However, the brand is still so immensely popular that even non-athletic types also wear Nike apparel. The biggest money makers are their footwear products, with their flagship Jordan brand always selling like hotcakes. Number 2. The Pepsi Company. Many consumers think that the Pepsi Company only owns the beverage, but they also own popular brands such as Frito-Lay and Quaker Foods. The Pepsi Company has done a great job diversifying their portfolio of brands with high-quality consumer goods. Number 3. Coca-Cola. This company, which is one of the most recognized brands worldwide, owns many additional brands besides the iconic Coke brand, like Minute Maid, Vitamin Water, and Powerade. Number 4. Realty Income. This real estate investment trust, REIT, has tenants such as Walgreens, FedEx, and LA Fitness. They operate nationwide and are also diversified across many different industries. They also pay a monthly dividend, which makes them a favorite dividend company for many investors. Number 5. Fastenal. This fairly boring company sells industrial and construction supplies. Even though Fastenal is not in an exciting industry as technology, it makes up for it by its sheer consistency in delivering value to both its customers and shareholders. Chapter 6. Dividends. Invest for passive income. If you want to invest for passive income, look no further than dividend-paying stocks. We'll talk about what dividends are, why companies give them out to shareholders, and the pros and cons. At the end, I'll give you 4 great dividend stocks to put on your watch list. Dividends are a great way to earn consistent income. Companies pay out dividends to their shareholders on a quarterly basis, but there are also companies that pay out monthly, semi-annually, and annually dividends. When you receive a dividend, it is either deposited in your cash account or it is reinvested to buy more whole or fractional shares. This is also called a dividend reinvestment plan, or DRIP. The ultimate goal of a dividend strategy is to receive dividend payments that meet or exceed your earned income. It is at this moment that you can retire and live off dividend income without ever having to sell the underlying stocks. It is also important that these dividend payments grow faster than inflation in order to maintain your buying power. Do you need $1 million to start investing in dividend-paying stocks? Of course not. You can start off by just buying 1 or 2 shares in dividend-paying companies. However, it will help if you have more money to invest, because you'll get more in dividend income. The more shares you own, the more dividends come your way. For example, the Coca-Cola Company pays out a 37 cents quarterly dividend, which adds up to $1.48 a year. That's what you would receive if you only owned one Coke share.